In this video, we're going to talk about how to calculate your advanced monthly refundable child tax credit. So we're going to do the calculation, the phase outs, and third, and most importantly, how to maximize your monthly advanced refundable child tax credit in order to make sure that you're getting the most monthly at the end of the year and also reducing your taxes. But before we get into it, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, certified financial planner, helping you reach your financial goals. So let's go ahead and get right into the calculation. Now, the maximum amount that you can get is either $3,000 or $3,600, depending on the age of your child. Those are the maximum amounts per child. So we're going to start there. That is going to be our baseline. Now, if you want to know more about the child tax credit, I did do an explainer video. I also did a video on the dates and a whole bunch of other information. So be sure to check out the channel if you haven't already. So let's go ahead and get right into these calculations. So here we have the $3,000 if your child is 6 or older, and then you have $3,600 if your child is 5 or younger. Now, all these dates are based on 12/31 of 2021. So it's this year that at 12/31, how old are they going to be on 12/31? That is their age basically for these calculations throughout the course of the year. So that is the age that you should line up with either the $3,000 or the $3,600. So let's go ahead and go over the example of somebody that is married filing jointly. Now, if you've already watched the explainer video, you're going to know that the maximum amount is $150,000. So let's just go through a quick example of having 2 kids. Let's say that you have 2 kids, and one of them is 5 and the other is 17. So in this case, the one that is 5 years old is going to get the full $3,600, assuming that we're $150,000 or less. So we're going to go ahead and say that this one is going to get $3,600, and then your 17-year-old is going to be qualified for $3,000. So that is the maximum amount in both of those scenarios. So simply just adding them up. So you're going to get $6,600. $3,000 plus your $3,600. Now that is the full amount of the child tax credit for 2021 that you could qualify for married filing jointly under $150,000. Now, if we take that amount and we divide it by 2, because the payments are going to start in July, go to December. That's 6 payments. That is half of the year. So let's divide this number by 2. That is going to give us $3,300, and that then gets divided by 6, and that will be our monthly payment. So take out the calculator, $3,300 divided by 6 equals $550 on a monthly basis. Now you will be able to go into the portal, which I haven't seen yet, and actually opt out of it if you think you're going to make too much money to qualify for this amount, or maybe you're way over that threshold, or maybe you just want to get the refund and you don't want to take it up front. That is perfectly fine. You can do that, but the maximum amount of these payments in this scenario would be $550. Now we'll go through a phase out example. So someone that's earning more than the maximum amount to qualify for the maximum amount of the child tax credit. So married filing jointly, the maximum is $150,000 before the phase out kicks in. So we'll assume we're going to do married filing jointly at $160,000 of adjusted gross income. Now this math is going to be identical if you're head of household or everybody else. So it doesn't matter what threshold you're at. The math is exactly the same, just different numbers. So we'll start with married filing jointly. And we're going to assume that the adjusted gross income is $160,000. So it's $10,000 over the limit. And in this example, we'll do 2 kids that are under the age of 6 and 2 that are over, still under the age of 18. So we'll have 2 at $3,000 each, and then 2 at $3,600 each. Now, the first thing you want to do is the math. You just want to add up the maximum amount of your child tax credit before you back out your phase out. So the 2 multiplied by the 3,000, that's going to be a total of, a little multiplied there. We'll do 6,000 here, and we'll add another 7,200 here. So if we add these two up, that is going to be $13,200. So this would be the maximum amount if we earned, or adjusted gross income was under $150,000. Now we have to figure out what our phase out is. So 150,000 subtract the 150, that's going to give us 10,000. So 160,000 is our adjusted gross income. Our phase out begins at 150. That is $10,000. So that means we have to take our $10,000. We can multiply it by 0.05 or 5%. So that means our $10,000 times 0.05 is going to be $500. If I can get my calculator to work here, 10,000 times 0.05 is $500. So what we need to do is then subtract our $500 from our total amount that we can qualify for before the phase out. So that means $13,200 minus $500. So we're going to take our $13,200, subtract our $500. That's $12,700. So now all we need to do is just take that number of $12,700 and divide it by 12, which will give us $1,058. So this is the amount that you would get on a monthly basis. Now, another way to just go through that math, if that's kind of confusing to you, is that you're getting the child tax credit, the advanced monthly payment, from July to December. That is 6 payments. So that is half of the year. So it's really simply just taking your total tax credit that you would qualify for and dividing it by 12. That's why we did it this way. So that's where you're getting the $1,058. That means for the year, you're going to get 6 of these payments. So 1,058 times 6, that is $6,349.99. We can round that to $6,350. So that's how much you're going to get as an advanced credit. Now, if you earn over that, even further over that, then that amount might have to be paid back. But if what you projected your taxes or your tax liability to be, or your taxes, your adjusted gross income, then that would be the number that you will get on your taxes, but you're just getting it in advance. So now the last thing that I want to talk about is how to maximize your child tax credit and reduce your taxes. So if you're getting this in advance, you could take this money and put it into your retirement account. The reason why you might want to do that right now is because if you have a retirement plan at work, you need to do that now before the end of the year. If you're a small business owner, you can put it into a small business plan after the end of the year. But if you have a W-2 and you have a 401k or a 403b, then you need to do that before the end of the year. So let's go back to this example. Let's say that we take our $6,350, and just for easy math, let's say that we put in $6,000 into our retirement plan from now until the end of the year. That means our taxable income will be reduced by that amount. So we're not only going to save on the child tax credit, get more from it, but we're also going to save on our taxes. So that $160,000 now becomes $154,000 in our adjusted gross income. So for the child tax credit, that is going to get adjusted. So rather than multiplying this number by 10,000 by 0.05, it would actually only be 4,000, because remember, 150,000 to 154 is only 4,000. So 4,000 times 0.05, that's going to be $200. That means we're going to get $200 more in the child tax credit. But if we also look at the tax brackets, we're also going to save on that. So for somebody that's married filing jointly for 2021, we can look right here and see that we are in the 22%. So we can multiply 0.22, because the full amount, 0.22, will be there. It goes from $81,051 to $172,750. That's at the 22% tax bracket. So you're going to save 22 cents on every dollar. So we can multiply that 6,000 by 0.22. So that 6,000 times 0.22 is going to be $1,320. $1,320 plus $200 from the child tax credit. So by doing that, by taking the money up front and quickly put it into your retirement plan in a pre-tax account, that is going to be $1,520 that you have saved. So the big benefit here is that you're not only getting this in advance, but now you have an opportunity to have it count for 2021. So if you waited to get that refund and then put that money into your retirement plan, it most likely will count because you're getting it in a refund. It's most likely going to count for 2022 and not 2021. So you're saving on your tax liability in 2021 by getting it in advance and putting it into the retirement plan. So take advantage of the opportunity if you can. If you have any questions on that, let me know in the comments down below. And if you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.